Good morning, everyone. Once again, this is Black Forest coming to you with another market analysis video. This morning, we're going to be looking at the Euro USD. Okay, but before we get started to break down this chart and break down this currency pair, we have to state that this video is for educational purposes only. This is not financial advice, but we all know why you guys are here. You guys are here to find good, credible Forex content that can help improve your ability as a trader and that can help put a little bit of extra money in your pocket during this troubling economic times of high gas prices and such. And plus, why do the hard work when we would do the hard work for you? Okay, so you don't have to worry about doing the research, what's happening here at Black Forex. We stay on top of the economics concerning each currency, so you do not have to. All you have to do is like, share, and subscribe, and you can continue to get all this good Forex content that is helping you guys become more profitable traders. Okay, so with that said, now let's get into what's happening with the euro and the USD respectively, starting with the euro. Okay, now the euro did have some economic news come out throughout the London session, and we had more negative news than positive news, but it was almost like at an even how much negative news, positive news come out, with only one or two economic news events being more so negative than positive. So it's still kind of right there in the middle between strength and weakness, leaning more on the strength now when it comes to leaning more on the weaker side when it comes to the economic numbers. Okay, but we still have that dark cloud hanging over the European continent's economy and the euro. We actually have two dark clouds hanging over it. We have inflation that's being catalyzed by the sanctions that the European Union has placed against Russia. That kind of has backfired on them and is hurting them more so than it's hurting Russia. And then also we have the dark cloud of geopolitics that is concerning the FUD of the entire European continent's economy, which is the fear, uncertainty, and doubt due to the Russian-Ukrainian war that's being fought on the European continent. Based on the news reports that's coming out, it is looking like that war is actually about to get more aggressive. It looks like it's about to actually get more aggressive, with Russia taking more of an offensive standpoint to in its invasion of Ukraine. So we're going to have to see how these things play out on the charts. But based on what the trajectory and projections are looking like, it's looking like we're going to see a continuation of the weakening of the major three European continents of currencies, which is the euro, the British pound, and the CHF, with the CHF being the stronger of the other two, due just because the way that the Swiss government are handling these geopolitical and economic events that are affecting its markets. Okay. So as long until we get some type of ceasefire, halted hostilities, and then that will allow the EU to be able to take care of its economic woes, we are going to continue to see a weakening of the euro. And I would not be surprised just prior to the beginning of the summer that that the European continent economy will be in full-blown recession. Okay, now let us discuss what's happening with the USD. Prior to making this video, we did have some economic news come out about the USD concerning the CPI. Okay, so the way these numbers came out about the CPI, it looks like that the inflation is starting to peak and starting to stagnate. So it does not look like it's getting any bigger, even though the numbers from a technical standpoint will say it's the biggest it's been in like the last 40 years, because it technically is, but it could have been a lot worse. Okay, let me make sure you understand this. It could have been a lot worse. So the way the economic numbers came out concerning the CPI showed that it is starting actually to peak and stagnate out, and we're looking like we're going to have a rollover phase in which we're going to start to see a weakening of the shrinking of inflation going into these next several trading weeks. So we may see the USD has been gaining a lot of strength due to all the good economic news that's been coming out about it prior to these numbers. We had some good job report numbers come out through the latter part of last trading week as well. And then also we had the Feds and the American government taking a very active role in combating inflation and trying to bring down gas prices as well, to understand how the USD has a non-traditional relationship with oil due to the current geopolitical market. I would strongly suggest that you watch our USD CAD video. We go into it in great detail explaining what is happening there. Okay. So we're going to see a continuing of the strengthening of the USD with slight hiccups as it gets strengthened. Hiccups is going to be, it may show temporary weakness, but that weakness has more so to do with retracement than actual fundamental weakness. Okay. So if you start to see prices got to go the other way on your charts, depending on which side of the USD currency is on, don't take that this is okay. This is price rollover. We're going to continue to go up. We're going to continue to go down. It is just retracement. Okay. So, with all that being said, now let's break down what's happening on the chart. Okay. So, what we see happening on the chart here, right, is this is our upper part of our range. This is our lower part of our range. This is the upper extreme of our range. This is the lower extreme of our range. Okay. And basically, as we've seen here, as the euro continued to get weak just from the dark clouds hanging over it and the geopolitics climate dictating what's going on in the world today, we see the euro continue to get weak. Now, we did have an initial push up and retracement, and we could see a push up to this area here or here before we start ranging out to go down, or we could go down from this area here. Okay, so the one of the three scenarios is that we could range up from here, we could range here, go down. We could get to this area here and here, range up and then go down. More likely scenario is we're going to get to this price area here before we range up and continue to go down. Okay. Hope that information was helpful for you guys. Happy trading.